by the Solar and Energy Loan Fund Organization regarding sustainable programming, resources for affordable housing, and potential partnership for equity investment opportunities. For this, we welcome Solar and Energy Loan Fund Business Development Manager Annie Vanek-Dasovich is the closest I can get.
I know my last name's a train wreck. They just call me Annie. So.
Oh, well, welcome, Annie. Thank you so much for joining us today.
Thank you so much for having me. We're really excited to report back. As you all know, we had a grant from you all that started, a seed grant in 2018. We finalized it in 2020, and we're still here, rocking and rolling. So
That's good.
So SELF has grown a lot since 2018. We've created new programs, and I'm going to tell you all about them. And we're doing some really, really interesting things. Okay, I think I have to do that. As you know, SELF was co-created by Doug Coward and Duan Andrade. Duan is our new executive director, so we've had a little bit of a leadership change. A lot of women at the top right now. And Doug is now our director of national expansion. And they together have, really created an organization that is able to meet the demands that are coming in the future. So a little context and history. We are the first local green bank in the U.S. Doug was an elected official in St. Lucie County. Couldn't believe, that you had to be a millionaire to afford solar. That's how it all started, right? And has become so much more. We have, starting in 2010, we had a seed grant from the Department of Energy as part of the American Recovery and Reinvestment Act. And we became a CDFI soon after that, and of course a 501c3. Our mission is to advance equity in property improvements that are sustainable, climate resilient, renewable, and will help families' health. So we're really proud, that we are doing all this work now and that we are able to keep moving forward. Here's our mission again. So what do we finance? So we finance what we call necessary home improvements, right? Things that keep families in their homes. The most affordable home is the home that you're in. So we want to make sure that we keep families in their homes. So everything from, renewable energy like solar, all the way down to like water and sewer and those kinds of, lateral line replacements and septic to sewer. We do roofs and windows and doors, hurricane strips, straps, and clips. Weatherization, so that's all types of different insulation and weather stripping. We do health and safety, and that's like disability upgrades to keep people who are disabled in their homes so they don't have to leave. A lot of those are for our senior citizens. And safety issues, right? If your home is covered in mold, that's not a healthy place to live. So we help with mold remediation. And of course, air conditioners, although we're big on heat pumps right now, just so you know. I'm a big heat pump fan. We have new lending programs. So y'all helped us out with the Green Home Lending Program, and that's for residential, homes for LMI families. And that is the first program that we created. About a year and a half ago, we created a program for landlords because we knew that there was this gap, right? So people who were renting couldn't necessarily take advantage of things like heat pumps and roofs that were still leaking. So we created a landlord program, started with the Atlanta Housing Authority, and that program allows landlords to access funds at affordable rates so that they can improve the homes that people live in. The other thing that we've just done is created a program we call SAGE, right? Wise Homes. It's a fund that allows for developers of small to moderate size affordable housing units to access, what is sometimes called gap or mezzanine financing when you're looking at the capital stack, right? These are all big finance words I've just learned. And so it's about creating climate resilience and energy efficiency in affordable housing where there wasn't really a incentive to do that before, right? They would just put up whatever was the cheapest and get people in. When they use our financing, we have a little bit more control over that. So we can incorporate these types of improvements. And the other thing we do is a lot of these developers are really new to developing, right? They have property that might have been passed down to them from relatives. They want to help out their community, so we like it to be, part of that community. And so we also have like a little, in fact, we just did it this past weekend, a little symposium on how to be a developer, what that means, how to be a good landlord, and all those kinds of things. So it's a really kind of comprehensive program to move that ball forward. So we're now becoming kind of more of a one-stop shop, right? So everything from residential to multifamily. Now we're able to help with all that. So our loans support financial inclusion. Obviously, it's access to affordable financing for people who don't have access to affordable financing, right? That's really kind of what is important to us. And then we also have our contractor network, right? Our contractor network is over 950 contractors now. I mean, that's a lot. It's like herding cats. And honestly, we help put them to work because this is work they would have had to walk away from, right? Now they have these jobs because we are able to finance them. And then we actually coordinate those projects between the contractor and the client because, construction is not everybody's, bailiwick, so to speak. It's got its own language and it can be very confusing. So we help by coordinating those projects. We see the project through from the beginning when that client comes in and then we hold their hand all the way to the end until that project is finally paid out. And then, so it's a different type of relationship. It's not like a banking relationship where you go in and it's all based on credit score. This relationship that we form with our clients, it's a very high-touch loan, is very personal. And, we remember their birthdays and they remember ours. And it's pretty amazing, actually, to be part of their families. And the trust that they put in us is wonderful. So we have a triple bottom line impact model. We provide social impacts, environmental impacts, and economic impacts. And we've kind of talked about this already. We enhance the health and well-being, the safety, their quality of life, productivity, and we help rebuild credit and create, neighborhoods that reflect the people in them. And then environmentally, we're reducing CO2 emissions. We're saving for these families on their electric bills, which is huge. It may not be big change for us, but if there's a 30% improvement in your electrical usage, right? And your bill is $100, which would be really cheap actually. That's $30, right? $30 a month is a lot of money, believe it or not. So we try to create healthier and more sustainable cities. And then, of course, the economic impacts. Besides these savings on energy insurance, because if you put on a new roof, put on hurricane cliffs and strips or new impact windows, now you're getting insurance savings layered on top of that, right? But also that whole idea of access to capital, creating green jobs with our contractors. So we actually put people to work. And we increase the preservation of those assets, right? So a home in a community that's been protected and kept up to date, right, is much more valuable. So we also help create that for them and help preserve the value that's in their homes and in the housing stock, therefore, in general, which is important to cities and counties. So here's an example, City of St. Petersburg. We use you guys as an example a lot because of this partnership we've had with you and because it is honestly, it's the yardstick by which we measure every other partnership because it has been such an awesome partnership. So with $300,000 seed grant from the BP oil funds, we launched a satellite office here. Rob Perry is our loan officer here. And since then, self-created about 375 sustainable loans for families, over $3,700,000 worth, almost $4 million since we started here. That's a 12-to-1 margin. It's a ROI of, I mean, it's almost like amazing, right? I mean, you can't even think about what that means, but 1,130% return on your investment. That's huge, right? And we've also, have now 250 plus contractors just in this area alone that are part of our program and that we help, and who help us by finding these families for us. So we will be maintaining this regional office. We've, gotten to the economies of scale, and, sadly, we're not leaving. So just to let you know, we're still here, we're going to be here. So how are we different than traditional lenders? We focus on LMI property owners, right, which is very different than banks. Banks, they all want the people who've got 700 plus credit score, right? Even 680 plus. Our credit scores, go from 0, believe it or not. There is such thing as a 0 credit score. And our average is right around 620, right? Anywhere between like 580, 660, something like in that. We do our underwriting different. So a bank is only looking at credit score, right? And they're taking that measure and they're saying whether or not you are creditworthy. What we look at is the ability to repay. It's different because we're looking at your disposable income. We're looking at your debt to income, some other, your history of your financial file. And we're making a decision based on that, how, whether or not you're can afford to repay that loan, right? So that's a lot more fair, right? Fairness takes a little extra time. It's not instantaneous. I know, a lot of people want an instantaneous credit decision, but our credit decision probably takes, less than 24 hours. So it's still quite fast. We have, of course, our pre-vetted contractor network. We know that they are all properly licensed, insured, and that they have a good reputation. We work with them on project coordination, of course, we've already talked about that. So because we report on our loans to the credit bureaus, our installment loans actually improve people's credit ratings, right? So they go through our program and they are better off than when they came in. And that's what we want people. We want people to be better off than when they came in. And it's, we have different types of plans that are available. We kind of shape the payment plan to the family instead of the other way around, which is very different. And there's no risk to losing your home, right? It's not a PACE loan, which is a tax lien, and it's not a home equity line of credit or a mortgage refinance where you actually have a second mortgage. So there's no lien on the home at all. It's all unsecured lending, right? I know I have banker friends who are like, 'cause our default rate's like 2%, and they're very jealous of that 2% rate, but they also think that we're crazy, right? Because of what we do. Unsecured lending, wow, yeah, but that's what we do. And the reason we do it is because it's the right thing to do. So in order to be eligible for one of our loans, it's not a high bar. You have to own the property, right? You have to be located in one of the states that we're located in. You need to be current on your property taxes and current on your mortgage, right? Those are important things to us. Then we're going to ask that they, prove the ability to pay through proof of income and expenses and all that kind of stuff. You can't have a bankruptcy for the past 12 months, not usually an issue. And we sometimes request co-signers or what's called cash collateral or cash guarantee to help put a little skin in the game for some of, more risky clients. So a lot of people want to know where we get our money, right? So, in addition to grants like the one that y'all gave us, we have faith-based organizations, impact investors, who, will lend us money at low rates, and we put it back out on the streets, right? We have a lot of bank loans. Again, they're giving us capital at low rates because they need to be lending in the CRA, right? We do that lending for them. And then we have other types of grants and grants from healthcare systems. So it's kind of the pieces of the pie are all kind of evening out as we move forward. We have special loan programs. One of them is, we have women head of household, seniors, veterans. These types of programs help us, a lot of our families are on fixed incomes. And so we have special programs for them. Kiva is one of them. This is actually a St. Pete resident. Sylvia has a child with cerebral palsy and epilepsy, and in the summer it became worse. So we were able to provide her with a loan for a new air conditioner that was much more energy efficient than the one that she had, and her child's health improved dramatically. Water quality, sewer loans. So this is a new program that we have with Martin County. So the nice thing about SELF as an implementation tool is that we're really flexible, right? Mm-hmm. So Martin County has a municipal law that everybody had to get off of septic and move to sewer. And they had $200,000 available to help low to moderate income families, right, with this transition. We met with them, and they were able to, so they had planned to do about 25 homes, right? We've done over almost $500,000 in septic to sewer conversions with Martin County, and helping approximately 400 families. So their program went from, like 25 people, but what they did is they have a small grant with a small loan, it's on their water bill, and we were able to help a lot more families that way by leveraging that capital, right? By leveraging their grant with our small loan. And this is a great model. We've talked about this too, the Atlanta Housing Authority and SELF, we developed the landlord program to help landlords. In Atlanta Housing Authority's example, they actually have a rent boost. So when a landlord improves the property, they're entitled to a rent boost. That rent boost pretty much covers the cost of their monthly loan payment, which is, great. They don't have to raise their rents or anything. So we've raised over $40 million to date, leveraging about $90 million in projects. That's a lot. 31 million have gone to unsecured loans. We've helped about 3,100 families in a 4-state region. Of course, like 99% of it's in Florida, but we have branched out to Alabama, Georgia, South Carolina, hopefully soon to Tennessee and Texas. 74% of our clients are low to moderate income. That's a high number. As a CDFI, we only have to do 60% of our lending to low to moderate income families. We always exceed that number. Our average default rate is 2%. Again, more than 950 contractors in our network. And we now have satellite offices, not just in St. Pete, but in Tampa, Orlando, and Miami, Atlanta. And, we're expanding into the rest of the southeastern states as well. It's very exciting. Rob Perry, of course, is our local contact here. That's his information and mine as well. And I'd be happy to answer any questions.
All right, thank you. First, Council Chair Gabbard.
Thank you, Chair, and thank you, Annie, for the presentation. Thank you, like I said to you privately, for putting it together so quickly and providing such a great recap for us. We've had a very long and obviously prosperous relationship so far. I don't know that I've ever seen an ROI that high on any sort of funding that we put forward, so that is fantastic news, and I just so appreciate everything you all do. I don't have any questions. I just wanted to take a moment to sing your praises. The way that you all go about consumer protection is the model that I really feel like everyone should be following when I think with good intention they are trying to offer products and services, but then the unintended consequences that often come for the particular property owner, you all have really found kind of the secret sauce to making sure that you mitigate all of that. Yep. The fact that your default rate, I mean, that's for a finance institution is absolutely incredible. And you've maintained that through COVID, through all of, the downturn that we saw for a bit in the economy and with people's jobs. Everything you do is about residents and community, keeping people in their homes. I really wanted to kind of put a pin in that affordable housing funding that you have available now. That is phenomenal. I spoke last year on a panel with Duan, and she was talking about that specifically when you had first launched it. And I will tell you that affordable housing developers across the state were in that room, and they were all very interested. So I'm looking forward to seeing some of those dollars be really put to use in St. Petersburg.
And, as soon as, I think we're going to be moving forward with our first deal soon.
Good.
So it's again, it's getting that out on the streets and
Yeah.
making sure that those developments go forward and help, communities and families and the developers and
fantastic.
contractors. So it's kind of multi, It's
Yeah.
interesting how all that works together.
Well, it takes a lot of stacked funding to make affordable housing developments work, especially for folks who maybe haven't been in that space before.
Exactly.
And so I really commend you all for taking that additional step. And then I would just say, and I can't unfortunately share too many details now because it's kind of in its infancy stages, but we've started to have a conversation about how your very fantastic sewer to, or septic to sewer program could possibly be modeled here in our city to help us with some of our infrastructure needs.
Absolutely.
And you all have been incredible in just the creativity that you show whenever you are presented with a challenge. And so looking forward to continuing to work with you all on that. And council members, I'll be bringing more information forward in coming months about how maybe we can leverage a tool like that here in the city
And,
as well.
again, that's what kind of interesting thing about SELF, right, is we want to help people no matter what. And so that makes us also more flexible.
Yeah.
And that's where we keep our focus, is how are we going to help? That's
Yeah.
why we're here.
If you've never had a one-on-one with them and you have ideas, I suggest they're the ones that you go to, because you can throw an idea out there and they can say, well, hey, what about this? Or what about that? Or we've got this program, maybe it might work. It's absolutely incredible and very inspiring to be able to work with people like yourselves. So thank you so much. And thank you to Doug and Duan, if they're listening, for all of their hard work and collaboration with the city.
Yeah, they're absolutely amazing.
Thank you. Thank you, Chair.
Thank you. Councilmember Floyd?
Thanks. I'll be quick. Yeah, I really enjoyed the presentation. It was great to learn more about SELF. It's something that you hear about a lot in the community. And so I was really excited to get this. I just want to ask quickly, and I don't know how exactly to frame this, but if you could just speak to, what the need has been. Are you all able to work with all the people that reach out to you, or do you are you hoping to expand capacity? I just wonder how that's going right now.
We try to help everybody. I mean, that's kind of what I think differentiates us, right? We try, instead of trying to figure out a way not to make it happen, we're trying to figure out a way to make it happen, right? Because families need these things. You can't go in Florida without a roof or an air conditioner. I mean, that's just impossible. So we're always looking for ways to make deals happen instead of killing them, right? And, we're always trying to expand. We want to help more people as much as we can.
Okay, cool. Great, thanks.
Thank you. Anyone else? All right, well, thank you for the presentation. Thank you for sharing. It's been a while since we've had a committee discussion about this. And I'm just really, really grateful for all of the work that you've done and that you continue to do for the community. Anything we can do to help get the word out that this type of assistance and these opportunities are available,
We definitely have ideas. But you guys, you guys are like the model that we base everything on, because it has been so successful and you all have done so much for us. And we are so grateful for that partnership, honestly.
we are
because
too.
it gave us enough room to jump and make some of these new investments and make some of these new types of loan products, right?
Yeah.
I mean, we
It's
couldn't do it
amazing.
without you.
Yeah, the difference from when I first joined city council in 2018 to now is really extraordinary.
Yeah, because and that's when I came on board too, was 2018. So, and I mean, it's
Look at how far this has come. It's really,
how far and how quickly. Really.
right.
So we're very excited.
Well, thank you, and we remain ready to help with anything to
Thank you.
help with your mission, so thank you.
Thank you.